Let's go.
The 9th edition of the Singapore Air Show, Chinese manufacturer Comac showcasing C919 for the first time outside of Chinese territory. Defense systems dominating headlines.
Because of the geopolitical threats, we want to make sure that we're providing that catalyst to tie capabilities together.
We see quite a different demand across the region. In some cases, it's very much on the maritime, and in other areas, it's more around the land borders.
Do you know if your products are being deployed in the war in Gaza?
What I can say is that we are a supplier of systems and services to the IDF and the Israeli MOD. I cannot say anything else.
This uptick in defense spending that's really global and is straining the supply chain.
Are you seeing any alleviation of those supply chain crunches?
We are still limited by the supply chain to increase the volume of our jets.
Sophisticated.
Welcome back to Fast Money. North Carolina is the latest state to legalize online sports betting. 8 online sports books launching in the state today, including DraftKings and FanDuel. With March Madness just around the corner, what does this mean for sports betting stocks? Our own Contessa Brewer joins us now with the latest. Hey, Contessa.
Hi there, Melissa. Yeah, when it comes to profitability and market share, every state matters. Today, North Carolina launches mobile sports betting just in time for March Madness. 8 operators granted licenses in the Tar Heel state, each paid $1 million licensing fee. Now, the big guys, FanDuel and DraftKings, will roll out their dominant apps and the promotions that go along with them. So will BetMGM and Caesars, which are duking it out for 3rd place in market share nationally. But ESPN Bet's launch may get outsized attention in North Carolina. The rebrand from Penn's Entertainment, no longer Barstool, now taking advantage of the licensing deal with the sports media powerhouse. And since it's launching on day one with its bigger competitors, it offers the clearest view about whether Penn can muscle in on some major market share. Fanatics Bet, Michael Rubin's newcomer, will compete in North Carolina. And Underdog, which has made an impact in daily fantasy, competitors, listen, they've been lobbying hard against that platform in multiple states, accusing it of offering sports betting in the guise of daily fantasy. But in North Carolina, it launches as a sports book. All these operators will pay 18% tax, much more business friendly than, for instance, here in New York, where the nation's biggest state for sports betting charges 51% tax. Last year, sports betting gross gaming revenue, Melissa, it grew nationally 45% over 2022 to nearly $11 billion. And one final thing, the ACC kickoff tomorrow, March Madness starting Sunday. Some states restrict college sports betting, like they don't let bettors to wager on in-state teams, but North Carolina does not have these restrictions. So we'll see how Duke and UNC line up.
Sounds like a land grab, Contessa. Are there going to be a lot of promotions?
There already are, but nothing in the neighborhood of what we saw when New York launched. So now the promotions are in the neighborhood of like $200, $250. It's not anywhere near the $1,000, $2,000, $3,000 promotions, partly because the sports books have figured out it doesn't pay off. Sports bettors are notoriously promiscuous. They will not stay. They chase the promotions, so it doesn't pay off to offer those kind of promotions.
All right, Contessa, thank you. Contessa Brewer. Tim?
Contessa is our resident gambler, and she's nailed this spot. I actually really believe that the online sports betting world is just hitting upshifting in gear. In other words, a lot of these big operators now have enough scale where they're really able to pass through some of the efficiencies. I think in the DraftKings case, they're allocating resources where they have them. They're not spending across the board as they used to. The guidance they gave recently on their numbers and a multi-year output on financial targets, right now seems reasonable. And again, this is a growing addressable market. I like it.
I think the average price target's 48. Barclays, the last one I saw, they raised their price target late February to 50. Into earnings, I think early April, people are going to start having to ratchet their numbers up. And I think that $48 average price is going to be north of 50 before you know it.
Up next, final trades.
he's the most successful sailor in Olympic history.
To actually get the job done and get that gold medal, it's a cliche, but that's a once-in-a-lifetime opportunity.
Speed racing with Sail GP.
You see these boats are inches apart going 100 kilometres an hour plus. It's a really compelling product.
And why it's so important to give back.
They really make a difference in their own communities, in their schools, in their own lives, to start collectively really making an impact there.
So Ben Ainsley joins the Leadership League.
Indonesia has a new presumptive president, Prabowo Subianto, more Jokowinomics, so more infrastructure, more social assistance, and more nickel downstreaming.
You need the global market, so you need the U.S. and also the EU. So plan A is to get a limited minerals agreement, but we have to also understand probably one of the requirements is that you cannot have an export ban on your nickel.
Just like it wants in its foreign policy, Indonesia wants a balanced incoming investment. They want to keep the Chinese investment. They'd like more American, Korean, Japanese, Australian, European.
Indonesia also needs to be the balancing power between the East and the West in the supply chain of the critical minerals.
This policy should be accompanied by competitiveness, improving productivity.
The labor-intensive industry like textile, garment, and footwear, they need actually support from the government. The industry that has become the foundation of most of the jobs opportunities from Indonesian labor force.
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering sustainability on CNBC.
What was my ambition when I was starting out? Survival. Grew up pretty rough, and we ended up homeless when I was in high school. It really motivated me to have a career in which I wanted to have an impact in people's lives. Art is bold creativity, bringing your visions to life. My dream for Kickstarter is that anybody with an idea can bring it into reality. If I can do it, I want to show other people that they can do it too. I just want to bust the door wide open for everybody that looks like me.
Time for the final trade. Tim.
DraftKings, I like the jackpot acquisition as well. I think it gets them into a gaming channel that has a lot of crossover into online sports betting. I think the space, it's addictive. I know it's not supposed to be, but it is.
Karen?
Yes. Dell, I like, I think the PC refresh, enterprise spend is back, and AI put them all together. It's a cheaper way to play the whole game.
Dan?
Yeah, I think rates lower, TLT higher.
Guy?
Big night there in MSG, Mel. I know you know.
Huge.
Yeah. I mean, a lot of hockey over the next week or so. Tim and both Dan and Tim will be there.
Amazing.
Go Rangers.
If you look at Freeport-McMoran, that comes out FCX. That's actually been doing the stealth rally. I think you continue to ride that horse.
Silent F in clam.
Good morning and welcome to the programme. Wall Street finishing mixed following a seesaw session. The S&P 500 and the Nasdaq slipping as some froth comes out of the tech trade. The market is bracing for CPI numbers due out later today. Shares of Oracle, in the meantime, surging in extended trade after beating earnings estimates on robust cloud demand, but revenue did disappoint, coming in lighter than expected. And Bitcoin blasting past the $72,000 level, hitting another record high. Ethereum also getting a lift from the rally, topping 4,000 for the first time since December 2021. All
right, let's start with a look back at the market and how we did overnight on Wall Street. The scorecard, major averages finishing mixed, as you can see, ahead of February CPI, which drops tonight Asia time. The S&P and the NASDAQ both finishing in the red. Note that as a couple of the recent high flyers continued to lose steam. NVIDIA, one of them, down for the second session in a row after racking up a 2% loss. Super Microcomputer, which just saw a monster rally in recent months, slumped more than 5% overnight. In the crypto space, meantime, Bitcoin and Ethereum powering higher on news that regulators in the UK will now allow crypto-linked securities to be listed on the stock market. There right now, BTC at 72,490 and change, Ethereum at 4051 and change. And MicroStrategy popping, the company doubling down on crypto, spending more than $800 million to add another 12,000 Bitcoin to its holdings. Let's get right to Steve Kovac, who's been tracking the action on Wall Street for us and joins us with all the big moves, including, Steve, earnings out after the bell. Good morning.
Hey, good morning, Martin. Yeah, mixed. Let's talk about Oracle first, because they had some mixed results in their third quarter. But some commentary on AI plans appear to be sending shares higher after hours, as much as 14%. EPS was a beat at $1.41 adjusted versus expectations of $1.38. Revenue, though, a very slight miss here, $13.28 billion versus the $13.3 billion expected. As for those AI comments, CEO Safra Catz saying in the earnings release, there were new cloud infrastructure clients bringing remaining performance obligations soaring 29% to $80 billion. Catz says that's a record for the company, though less than half of those obligations will come in over the next year. No formal guidance, but Katz's statement says to expect more of those large contracts to come, also noting demand exceeds supply for its AI products. Asana also reporting earnings after the bell, but some wild swings in that stock shortly after release. But shares have settled and just slightly lower now, down about 2%. Company beat estimates on the top and bottom lines, and guidance was right in line with expectations. Now, the story of the day, over to Meta, which saw shares fall more than 4% after former President Trump blasted the company during an interview on Squawk Box this morning. Trump has reversed his position on TikTok, saying the app should not be banned in the United States because it would benefit rival Facebook. Take a listen to what he said.
Frankly, there are a lot of people on TikTok that love it. There are a lot of young kids on TikTok who will go crazy without it. There are a lot of users. There's a lot of good, and there's a lot of bad with TikTok. But the thing I don't like is that without TikTok, you can make Facebook bigger. And I consider Facebook to be an enemy of the people, along with a lot of the media.
So there you go, enemy of the people. Meanwhile, that bill to ban TikTok or force ByteDance to sell it to a U.S. firm is making its way through Congress, passing another hurdle today. President Biden said he would sign the bill if Congress passes it. Martin, I'll send things back over to you.
All right, thanks, Steve. Matt Stuckey is Chief Portfolio Manager for Equities at Northwestern Mutual Wealth Management, joining us live now. Matt, good to see you. What do you make of the market right now?
We're at a kind of a interesting point in history where, just looking at the market as it sits today, we're looking at one of the most concentrated setups to the S&P 500 in history. Look, the top 10 names in the S&P 500 make up more than 30% of the overall concentration of the S&P, which is eclipsing what we saw in 1999. And so these large companies are really having outsized impact, both from their fundamental trends as well as their weights inside the S&P on the direction of trading. It's been a strong start to the year, but just in the last few days, some of that strength has been tested. And some of these big, large technology companies have started to trade a little bit lower, just kind of digesting some of the strength. And so it's had an outsized impact the last few days.
Is it too early to say that leadership is shifting away from tech?
I think it is. A few days doesn't make a market. And certainly if we're looking at the fundamental strength of some of the companies inside that top 10, there has been a large amount of both resilience and strength in the fundamentals. Just looking at the longer term, though, there is reasons to be a little bit concerned about this level of concentration. If we're looking at the weight of these companies relative to how they're trading from a valuation perspective, this group is starting to outpunch their weight in terms of fundamentals. And what I mean by that is collectively, even though these companies represent 33% of the market, they only represent 25% of the profits. And from my perspective, that's starting to make me think some of the sentiment and hype around artificial intelligence and some of the mega trends is getting priced into these shares today. And if they don't live up to those expectations, that's a risk that's outsized in this market setup.
Yeah.
Matt, CPI, that number really rocked the boat last time round, didn't it? Is it going to have the same effect this week when that number hits the market? And how should we be positioning for consumer sentiment, given the headwinds or the tailwinds in the economy, depending on how you see it, resiliency or soft or hard landing? How are those numbers going to change the narrative?
Yeah, we'll get that tomorrow morning. And to your point, when we got that number for January last month, it did cause a reaction that, we're probably not going to see some of those Fed cuts as early as what the market expects. And I would anticipate a similar type of read tomorrow morning. What's happening and kind of feeling the numbers is home prices in the United States are not moving lower. They're actually moving a little bit higher. And that feeds into that owner's equivalent rent number, which is such a big weight within the CPI. But if we zoom out a little bit and look at kind of what's driving inflation today versus what's driven it the last few years, it reminds us of kind of late business cycle dynamics where wages are the big driver of inflation. And quite simply, wages are at a level right now that is inconsistent with a 2% inflation goal that the Fed has. And so despite whatever number we get tomorrow morning, we think that there's still a lot of room to go before the Fed can declare a victory on the inflation front around that 2% inflation number, because a 4.5% wage number is simply just too high for a sustainable 2% inflation level for the overall economy.
Does it feel, though, Matt, that the markets and the Fed are now roughly on the same page in terms of pricing the first rate cut and the number of rate cuts that are in the pipeline for 2024? Is that what the bond market is telling us? Because we have seen some stability now in the 10-year yield.
We have. I would say that we're still at a moving target, though, for the number of rate cuts that we're likely to see. If we just kind of rewind the clock back to last October, the market was pricing in only a handful of cuts, 2 or 3 cuts, and the 10-year yield was north of 5%. Fast forward a few months after that, with some good news on the inflation front, and the market was pricing in up to 7 cuts, and we've unwound a lot of that. Now only 3 or 4 cuts priced in for the entirety of 2024. I think the path forward from here on the ultimate number of cuts we're going to see is going to be driven by 2 factors, inflation as well as the labor market situation. If inflation stays sticky and we don't see a big deceleration in the labor markets, we would probably take the under on that forecast for a number of cuts we'll get from the Federal Reserve. However, if some of this mixed labor market reports that we've been sifting through so far this year translate into further deterioration in the market for labor, you're likely to see a much higher number in terms of Fed cuts. And that labor market picture is just only leading to more confusion on that front after we got that non-farm payrolls report last Friday.
Matt, we'll leave it there for now. We will get back to you with some stock selection, including United Health on the healthcare side. Matt Stuckey stays with us. As we tail into a break, let's stay with healthcare. And a big winner on Wall Street, Moderna shares are soaring on news that it's partnering Merck to start a clinical trial for skin cancer treatment. The move will help Moderna diversify beyond its current vaccine business. The stock up by a strong 9%. We're back shortly.
TotalEnergies makes the energy transition easier for you. With our collective human and technological skills, we are building a multi-energy company. We are improving the production techniques of today's energies and developing renewables worldwide to answer the challenges of climate and the growing energy demand. More than ever, we will continue to move towards energy that is cleaner, more reliable, and accessible to as many people as possible.
Real money, real debate, real-time moves. Scott Wapner, live from the New York Stock Exchange. Halftime Report, CNBC.
The Power Plays are here, breaking down the markets with updates and deep dives. What's moving now and what's next for your money? Sarah Eisen, Carl Quintanilla, Money Movers, weekdays, CNBC.
From interest rate paths to economic slowdowns, geopolitics to local politics, 2024 is serving up a host of challenges for Asian businesses.
How are top leaders rethinking their plans and where are they putting their capital? Hear what the C-suite has to say about confronting challenges and adapting leadership in disruptive times.
Get it straight from the C-suite, Tuesdays on Squawk Box.
Next, Sarah Eisen's full interview with World Bank President Ajay Banga.
My principal focus is on the developing world and what we can do for them.
How do you think China's economy looks this year?
It's tough to say, but just remember this is a very large economy with a fair depth of capability.
The stage of the war in Ukraine, of course the war in the Middle East, how you perceive the economic impact of what's happening.
Ajay Banga, a CNBC Leader Special.
The Bond Report is brought to you by PIMCO.
Going to Asia, Australia, New Zealand. Not an economic release day. That comes tomorrow with the Consumer Price Index, a biggie. Our February read on Consumer Price Index, and we'll be paying particularly close attention to every metric. And of course, Thursday, we see the cousin of the Consumer Price Index in the form of the wholesale inflation reading. That'll be the Producer Price Index. Prior, today, how did the markets act? Well, we had $56 billion in 3-year notes auctioned off by the U.S. Treasury, the first leg of $117 billion in coupon supply, and it occurs at a time where the Biden administration announced its fiscal 25 budget proposal at $7.3 trillion with a T. Boy, has spending ramped up in the last handful of years, and it really does underscore why we pay so much attention to debt auctions, because we have so much debt and it keeps climbing, and it really looks like that will be the big adverb moving forward, climbing with respect to debt. How did the auction go? Investors stepped up to the plate. I gave the auction a B+ in terms of demand. It's straight up 1 o'clock Eastern. Tomorrow will be 10 years, followed by 30-year bonds. Now, we look at the equity markets, and they had a lot of red early, and the red slowly started to get smaller as the day progressed. Interest rates, well, we did have 3-year notes, the aforementioned maturity that we auctioned $56 billion of, closed at exactly a 1-month low yield on Friday. It has moved a little bit higher today. All Treasury yields are slowly rising going into tomorrow's CPI reading. How important is tomorrow? I can't stress how every inflation number and every jobs number has the potential to give us the final information we need to process when the easing cycle may begin by the Federal Reserve this year. Reporting from the CME HQ, I'm Rick Santelli, CNBC Business News, Chicago.
Let's get back to Matt Stuckey from Northwestern Mutual Wealth Management. Matt, let's get into some of your calls. And on healthcare, you do like United Health, largest U.S. health insurer, but hit by a cyber attack that could take months to recover. Why do you like this name?
Well, I think to put broader context around what we like today, our house view is that the U.S. economy is in the later innings of an economic cycle. And so in that type of environment, what we're attracted to first and foremost is business quality, companies that have large competitive moats around their business, strong balance sheets, and trade at reasonable valuations. And United Health to us really kind of fits that bill for a few reasons. First and foremost, they are the largest insurer in the United States. They're well diversified. They have a strong balance sheet. And to your point, they are kind of going through some negative headlines today around the cyber attack, which just pushed down the valuation to a pretty attractive level, in our opinion. We think that this is much more of a headline versus an earnings risk to the company. We might see a little bit of a downward pressure on earnings for this upcoming quarter, but it really simply just doesn't really impact the long-term value that we place on this company. We've been impressed year after year by this management team out executing the competition. And from our perspective, we anticipate that going forward, they're going to continue to outperform.
Speaking about value or relative value being uncovered, would you be adding to positions in NVIDIA, Matt, at these relatively lower levels? Or is there anything in here to suggest that the wheels are coming off the AI momentum?
In the near term, I don't think that there's a whole lot of risk to the story around NVIDIA or some other companies that are in the AI space. NVIDIA is kind of its own story, so let's focus in on that a little bit. If you kind of read through the tea leaves a little bit about the story, capacity is pretty much already called for the company's processors for the entirety of 2024 and into 2025. The near-term setup, which is kind of, I think, the point of your question here, is something more of a mixed picture, however, because it is the largest holding in a lot of momentum-based strategies. And momentum has had one of the strongest starts that I've seen in the last 10 years to start 2024. And there's probably some period of digestion that needs to happen. That's a very different conversation than the company's fundamentals, which continue to be quite strong. As earnings revisions continue to be up and to the right, the company has phenomenal pricing power and is clearly in the pole position around where they're at in terms of AI semiconductors. So from our perspective, the fundamental story remains very bright, but the near-term story is a little bit more mixed given how large it's become in terms of its place in momentum baskets today.
So, Matt, near term, you're saying that, look, we're late cycle, right? Inflation is likely to stay sticky or higher for longer. And overall, it sounds like the names that you like and the way you're picking them sounds pretty defensive. If we are late cycle rates, or if inflation does stay sticky, at some stage, though, with the risk of, let's say, a slowdown at the very least, if not recession, in the next 12 months, rates are going to have to come down, right? When that happens, a new cycle starts all over again. I mean, shouldn't you be positioning ahead for stocks that are cyclical?
We think long term you can make that call. Near term, we probably need to go through this process of continued quality leadership, and here's why: is you go through different market cycles in the past. Typically what tends to work well late cycle is quality. Cyclicality has its place in a portfolio, and it's very discounted today in terms of its valuation setup, and so we like that from a long-term perspective. But it's somewhat of a cautionary signal if we're going to have downward pressure on the economy. Companies that are more cyclical, that are more macro sensitive, are going to feel that pressure a little bit more than companies that are higher quality, that are going to be able to better protect margins, be a little bit more insulated from the macroeconomic situation versus companies that are more cyclical in nature. But to your point, if you look at the setup today for something like U.S. small caps or U.S. mid caps, they trade at very, very wide discounts to where the S&P 500 is trading, and have discounted some of the weakness that we expect given these late cycle dynamics around the economy today. So if your time horizon is 1 to 2 years out or longer out, certainly go ahead and have that position well represented in your portfolio, and we think that can make some sense. But in the nearer term, in terms of style leadership, we think quality is definitely something that continues to be attractive.
So discounted small and mid caps ahead of a potential recession, Matt, you think it will give you or investors optionality, right?
We do. For the reason being is that we've seen some of this weakness, like I just described, discounted a bit. If off the peak in terms of earnings expectations, mid cap and small cap earnings expectations are down in the mid-teens or so. And against those reduced estimates, we're only being asked to pay 14, 15 times earnings versus the S&P 500 today, which trades north of 20 times expected earnings, which are expected to grow 9% plus in a period where the Federal Reserve is at a restricted level. Given the Fed might be changing course at some point during 2024 into more of a neutral to accommodative stance. But you got to think, and there's got to be a lot of improvement around the inflation side of things before that can happen. We think ultimately the catalyst for that is some form of a mild recession. And so from our perspective, we want, something in between those two, a quality at a reasonable price in the nearer term, but over the longer term, small and mid-cap stocks do look attractive.
All right, Matt, great to talk to you. Appreciate the time. Keep safe and warm. We'll do it again very soon.
Thank you,
Matt Stuckey there, Northwestern Mutual Wealth Management, joining us live. All right, spring back to this side of the world and show you how markets are starting up Tuesday trade. New Zealand has been up and running for about an hour, looking soft. Down about 1/3 of 1%. $3 the Kiwi, 61.69. Sydney next online in less than 60 minutes. Futures there, handicapping. Looks like a steadier start. Australian dollar at 66.12. In Tokyo, online in less than 2 hours. Futures there are calling for a steadier start as well. Excuse me, I take that back. A softer start. Dollar yen is at 146.91, still sub 147. Quick break, we'll be right back.
The Bond Report is brought to you by PIMCO.
If you're looking to live it up like a crazy rich Asian, party like a celebrity, or dine like royalty, Singapore has it all.
From historic hotels.
You arrive as guests, you leave as friends, and you come back as family.
To one-of-a-kind shopping.
We pride ourselves on being the one-stop luxury shopping destination.
Haute cuisine.
This is our signature Campot peppercorn pigeon.
And sunset sails.
You really have to experience it to understand it.
All on the next First Class.
The 9th edition of the Singapore Air Show, Chinese manufacturer Comac showcasing C919 for the first time outside of Chinese territory. Defense systems dominating headlines.
Because of the geopolitical threats, we want to make sure that we're providing that catalyst to tie capabilities together.
We see quite a different demand across the region. In some cases, it's very much on the maritime, and in other areas, it's more around the land borders.
Do you know if your products are being deployed in the war in Gaza?
What I can say is that we are a supplier of systems and services to the IDF and the Israeli MOD. I cannot say anything else.
This uptick in defense spending that's really global and is straining the supply chain.
Are you seeing any alleviation of those supply chain crunches?
We are still limited by the supply chain to increase the volume of our jets.
Shares of AMD slumped more than 4% overnight, coming off their recent highs, falling in tandem with fellow chipmaker Nvidia. CNBC's John Ford caught up with AMD CEO Lisa Su at the South by Southwest conference in Austin, Texas, and asked her about the buzz around AI and why she's so bullish about the AI PC trend. Here's a slice of that exclusive conversation.
We're at the beginning of the era where we can make much, much more capable personal assistants in the PC form factor. And things like, I can ask my PC, when was the last time I saw John Fort? What did we talk about? Remind me what he was interested in. Those types of things, which today I'd have to spend, probably an hour looking through like all kinds of things. That's one example. Actually, on the South by Southwest stage today, we showed a really good example of doing text to image where you could do it locally, so you don't have to connect to the cloud. You can do it right in your own PC. And again, these are things that as the technology gets better, I am absolutely sure that everyone's going to want an AI PC.
A lot of the analyst world has been a buzz for the past several weeks about this $400 billion total addressable market for AI-related technology that you laid out. Again, my job to approach these things skeptically, we just went through this pandemic period where we saw this huge surge in demand for PCs, for e-commerce, for goods, and a lot of companies said, oh, this is going to continue up and to the right, and it didn't. So how can we be sure this is an exception?
John, the way I think about AI, and you've heard this from others, is AI is actually the most important technology that we've seen over the last 50 years. It's arguably the most important. And when you think about what it can do for enterprises, for all of us, for research, for development, all of that capability, you need more compute. Now, most people would say they've been really surprised at just how AI has taken off over the last 12 or 14 months. It is true. We've taken a technology that has been around for a while, but was frankly very difficult to use, and we've turned it into something where everybody on the planet can use AI technology, because it's language-based, and you don't have to be a programmer, you don't have to be an expert, you can just ask the AI what to do. Now, the truth is, AI is still in its infancy, so we're still at a place where we know that it will get better.
AMD boss Lisa Su there talking to CNBC's John Ford. Now, Tesla's Gigafactory in Germany is finally back online after a week-long outage. The plant lost power March the 5th because of an arson attack by a group of far-left activists who were protesting the expansion of the factory. The facility makes around 1,000 cars a day, and the outage has caused output to come to a total standstill, causing hundreds of millions in euros in damages. German energy network firm E.ON said that extra work over the weekend had helped to bring power back earlier than expected. Sri.
Staying with Europe, a Singaporean chip startup is setting up a new plant in Italy. Silicon Box plans to invest $3.5 billion in a greenfield facility to produce chips that can be used for AI and electric vehicles. Italy courting the company as part of its efforts to bring in more high-level tech investments.
We'll go for a quick break on Squawk as we tail out. Here's a look at how sectors on the S&P performed overnight. A couple of slices there. Energy and materials leading gains. We're back at 2.
Navigating capital markets requires agility and discipline. Leap into tomorrow with confidence, aided by our innovative and sustainable solutions. Nomura, connecting markets east and west.
For me, Squawk Box is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you might get some useful information.
Squawk Box, weeknights.
The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
We're moving from the autopilot era of AI to co-pilot era of AI.
We are just at the dawn of the robotics age.
The more experience you give it, the more capability this AI model can achieve.
Hopefully improves productivity, and it doesn't displace more jobs than it creates.
How to maintain our humanity if we live more and more digital lives.
The new era of tech on CNBC.
I think ambition creates a pathway. It gives you a purpose in life, and without it, you can drift along. On Squawk Box Europe, we covered 3 hours of live breaking events. It keeps me at the top of my game, having to react instantly to these developing events. You have to do the prep in this job. You have to spend the hours reading in. For me, it's instrumental as a journalist to work hard. I've always wanted to be the best journalist I can be, and it means something being on the best business channel in the world.
CNBC. Live ambitiously.
So it's going to be dramatic and talk about the market's soft, tender underbelly, but honestly, it's probably more just caution ahead of the CPI, which drops tonight Asia time, a number we'll be watching very closely. The final scores at the end of the day, the Dow up a tenth and a bit more. S&P, though, slipped a tenth. NASDAQ was down about 0.4. Yields are pricing like this ahead of the CPI print. The benchmark 10 at 409.82, rate-sensitive 2s at 453.81, and DXY at 102. $85 yen, still sub 147 at 146.92. Let's end up with oil and gold as we always do. You've got Brent global benchmark bid by about 0.5%, 82.45. Gold, we're up at 21.84 now at Troy Antry.
Martin, US President Joe Biden and former President Donald Trump hitting the campaign trail with dueling rallies in the swing state of Georgia. President Biden unveiling proposals to lower costs for families as Trump presses ahead to lock up the GOP nomination. NBC's Alice Barr has the details.
President Biden on a battleground blitz on the road in New Hampshire, fresh off unveiling his election year budget proposal that includes tax breaks for families, new money for housing, and lower health care costs. Earlier telling local leaders in the National League of Cities it's time for a new cycle of hope.
Pride in your hometown, pride in making a comeback, pride in America, pride in knowing we can get big things done when we work together.
That amid an already deeply contentious re-election campaign. Both the president and former President Trump rallied in Georgia this weekend ahead of tomorrow's primary there, with Mr. Trump mocking his successor's lifelong stutter and slamming his record.
Everything Joe Biden touches turns to everything.
In a CNBC interview this morning, the former president said this about entitlements, including Social Security and Medicare.
There is a lot you can do in terms of entitlements, in terms of cutting.
The White House quick to respond that President Biden will protect those programs as he addresses a key concern for members of his own party, his handling of the Israel-Hamas war, telling MSNBC's Jonathan Capehart that while he would never abandon Israel's defense, an invasion of Rafah would be a red line.
We cannot have 30,000 more Palestinians dead.
In a new ad, the Biden campaign targeting another vulnerability, the president's age.
Look, I'm not a young guy. That's no secret. But here's the deal. I understand how to get things done for the American people.
The messaging war ramping up on the road to the White House. In Washington, Alice Barr, NBC News.
Fleshing out some of the details of President Biden's latest budget plan and proposals, the administration proposing a $7.3 trillion budget, which aims to reduce the federal deficit by $3 trillion over the next 10 years. Much of the new funds will come from higher taxes on companies and wealthy Americans. Social spending remains a big part of Biden's election year budget, but he's asking for just a 1% increase in defense spending. The government has also earmarked $4 billion dedicated specifically to, quote, out-competing China, including more spending in the Indo-Pacific region. Let's get some analysis on these budget proposals with Stephen Gallagher, Chief US Economist at Societe Generale. Stephen, thank you very much indeed for your time. So this is a tax and spend budget proposal, but it needs a Biden win and a strong Democrat control in Congress to get through.
That's right. I mean, a lot of the elements of this budget that were put out today or proposed today were actually in proposals put out in 2021 when Biden enjoyed a Congress that was dominated by the Democrats, both in the Senate and on the House side. And he wasn't able to get a lot of these specific elements through, the extent of corporate tax increases, the extent of individual tax increases, and the amount of money he wanted to allocate for the child care tax credit program, as well as many of his health care type of programs more generally. So that was when he even had control or Democratic control in both houses or both chambers of Congress. Today, Republicans are in control on the House side. So there's absolutely no chance of getting this through now. And we'll have to wait until the November elections to see if there's enough of a majority, a strong enough of a majority on the Democrat side to see if these proposals really have legs and whether Congress can pass such a program. Then, of course, Biden himself needs to win in November in order to approve Congress's passages.
Stephen, let's say for the sake of argument that it is passed. Will it realistically narrow the deficit by $3 trillion?
It sounds like a lot to me over time. So it's $3 trillion relative to baseline. So it is you're talking about close to $300 billion per year. It has enormous corporate tax increases that they're expecting about $200 billion increased tax revenue just coming from the corporate sector. Whether an increase in the tax rate or an increase in just the minimum tax rate on corporates. $200 billion is a lot to extract. Companies tend to move out of the country and incorporate themselves outside of the U.S. if such a thing happens. It's a substantial increase, so we'll see if that can happen. He also has a pretty large increase in Medicare taxes, presumably on the wealthy, but it's fairly hefty. And I think, with an aging population, it might be somewhat difficult to put through and expect to reap net gains on that. But we will see. To me, there's some optimism built in terms of the total deficit reduction. And to me, nothing short of just focusing on deficit reduction itself is needed to actually reduce these U.S. deficits meaningfully.
So, Steve, these are just numbers, and we're just talking right ahead in November right now. But if this is an election year budget, talking about higher taxes on companies, on wealthy Americans, and just a 1% increase in defense spending doesn't look like a good look, even if you're targeting, let's say, the heartland.
Well, the heartland's probably that's why President Biden's having a difficult time getting the support from the heartland. No, this is not trying to attract voters that are not supporting him. This seems to be trying to galvanize that left-leaning parts of his party that may not show up on election day. So it's trying to make sure that it's trying to reinvigorate the left part of his party. Rather than hit the centrist. The tax increases, specifically the heavy spending increases on a broad array of program are really, these are the wish list of your more extreme members of the party. Extreme's always a strong word, but the moderates in his party, the centrist in his party, the Joe Manchin, the Samina, they were key to not allowing this to pass in 2021.
Back to the deficits, if we could, Steve. One thing we've been talking about for a while now is record Treasury issuance, right? The money's got to come from somewhere, right? And in this case, obviously, we're looking to borrow it. We've been watching especially closely what's been happening with what's known as the indirect bid. In other words, foreign money buying U.S. paper. Specifically, honestly, the Chinese bid and also the Japanese bid. Both of them have been tapering off. If the deficit continues to be a problem, nobody's willing to address it or really do much about it. Record issuance is going to continue. What's that indirect bid going to look like, though, when folks outside know that, look, we're starting to get sort of desperate for the money?
Sure. Well, I don't know if we're desperate for the money, but, we've enjoyed a long period of time where the Federal Reserve or foreign central banks have been major purchasers of U.S. Treasuries. And these buyers are yield insensitive, return insensitive. They're looking, they're promoting domestic policy, or they're trying to have a safe storage of their dollar holdings rather than trying to, achieve a certain return. The trick is now that we're going to be more dependent upon households and private investors, business institutional investors, to buy treasuries. And by so doing, by a greater reliance on yield-hungry, yield-sensitive investors, yields might have to rise in order to clear these auctions. That's one of the big dangers that we're watching. They'll clear, they'll be able to sell, but it may require a higher yield, and we may hear this word come back, bond vigilantes. They've been absent for a while, but these are the bond vigilantes requiring a much higher yield to take down the debt.
Indeed, we'll be watching. Steve, listen, we got to let it go there. Great to talk to you. Appreciate the time. Thank you. You keep safe and warm. We'll do it again very soon, I hope. Steve Gallagher there, SocGen joining us live. All right, so the Tech and Art Festival South by Southwest is in full swing over in Austin, Texas, and Mackenzie Segalos is there keeping track of all the biggest trends and also the buzz. Mackenzie, crypto is obviously a very big part of where you are right now.
Yeah, so Martin, crypto has been a huge topic of conversation this week in Austin, in part because Texas has a lot of favorable digital asset policies, so it's now home to many Bitcoin developers. And the miners who are producing this token, they're all buzzing about Bitcoin hitting yet another record high this morning. It's trading about $72,000, and a lot of that has to do with the influx of institutional investors into the crypto ecosystem. The UK today is announcing that it's opening the door to crypto exchange-traded products for the first time ever. That's right around the time that we saw crypto prices pop this morning. Meanwhile, in the U.S., those newly approved spot Bitcoin ETFs keep breaking records. In 2 months, they've collectively brought in nearly $60 billion.
We seem to be having some problems with Mackenzie's audio. We will perhaps try to reconnect with her later. In the meantime, we're off for a short break. Before we go, take a look at shares of New York Community Bank, slumping another 5% overnight. The troubled bank managed to raise about $1 billion in a last-ditch funding effort last week, but brokerages remain bearish about the stock, with analysts from Wedbush and KBW cutting their price targets on NYCB. Shares of the bank are down nearly 70% year-to-date. We're back shortly.
Can't miss reporting that impacts your money now. Be here when the opening bell rings. Squawk on the Street. CNBC. The day's top stories driving Wall Street. Tyler Matheson, Kelly Evans, Power Lunch. CNBC.
Think of Switzerland and you might think of fine cheese, luxury chocolate and snow-capped mountains. But you may also think of money. Switzerland has 1 billionaire for every 80,000 people, making it the third most dense billionaire population in the world. Only Luxembourg and Hong Kong have a higher proportion of individuals with a net worth of at least 10 figures.
Do you feel like you know any billionaires?
I personally know quite many billionaires, yes, and millionaires, yes.
I do not know any billionaires, no. Plenty of millionaires, but no billionaires.
No, I don't. I wish I did, but I really don't. Swiss residents are also among the richest in the world, with a mean net worth of almost $700,000, ahead of the US and Hong Kong. That makes the country stand out on several key wealth metrics. So what makes Switzerland such an attractive place for the uber-wealthy?
On a $100,000 margin loan, Interactive Brokers charges just 6.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade and TD Ameritrade are even higher. Move your account to Interactive Brokers and save at least $5,200. Or much more if you're trading big bucks.
This FYI is sponsored by Interactive Brokers. Direct market access to stocks, options, futures, forex, bonds and ETFs. One world, one account.
More than 6,000 stores worldwide. Chinese budget retailer Miniso is reporting results today. We also hear from Wharf Holdings on the back of a profit alert last month. The property developer is forecasting a return to profitability for the year 2023 of as much as $127 million.
An important inflation read comes out Tuesday. The Consumer Price Index, or CPI, looks at the average change in prices paid by consumers over a period of time. It is a measure of changing day-to-day expenses. President Biden will attend a campaign meeting with members of the Teamsters Union at their D.C. headquarters. The Teamsters are one of the largest unions that remain undecided in the 2024 presidential election. The union held a roundtable with presumptive Republican nominee Donald Trump in January. And Tuesday is Equal Pay Day, the date that symbolizes how far into the year women must work to earn what men earned in the previous year. Women in the U.S. earned about 20% less than men on average in 2023, according to the Labor Department.
This FYI is sponsored by Interactive Brokers. Direct market access to stocks, options, futures, forex, bonds and ETFs. One world, one account.
Interactive Brokers pays up to 4.83% on instantly available U.S. dollars in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 4.83% on uninvested, instantly available U.S. dollars in your brokerage account. The best informed investors choose Interactive Brokers.
The UAE government invested more than $20 million in research to start a process called cloud seeding. The UAE performs around 1,000 hours of cloud seeding to enhance rainfall in just 1 year, and it's all controlled in this building, the National Center of Meteorology in Abu Dhabi, where they track the whole process. We met with a cloud seeding expert to explain how the seeding process works.
We wait the forecast when we have a good, chance for a cloud. We send the aircraft to that location. Go under the cloud. In the first stage of the cloud, there is good updraft at that time. Start to release all the salt, and with the good updraft, of course, it will go inside the cloud. The droplets will become bigger and start to rain.
The center manufactures a salt substance that helps enhance rainfall. They put them in what they call flares.
The United States is an essential strategic trading and investment ally for the Philippines. In the coming months, I hope that we will be able to see our shared commitments come to fruition, driving robust economic growth, because after all, an economically strong Philippines is a formidable ally.
Philippine President Ferdinand Marcos Jr. there welcoming U.S. Commerce Secretary Gina Raimondo on her visit to Manila. She's leading a group of officials and business representatives in a trade and investment mission. Over 20 American companies, including Microsoft, Visa, Google and United Airlines, are expected to announce a combined investment worth $1 billion into the country. Martin.
Raimondo says that the U.S. is committed to expanding trade and investment across the Indo-Pacific in what's seen as a bid to reduce dependence on China, or the region's dependence on China. Now, CNBC's Eunice Yoon caught up with the Philippine Trade and Investment Secretary in Manila and asked him about how the country is balancing relations with the U.S. and China. Here is a slice of that exclusive conversation.
We have such mechanisms like the green lanes, where we handhold practically the investor in going through the process of permitting, licensing, and registration. Well, the opportunities are here. We always declare that the Philippines is open for business, and the foreign investors see the opportunity.
What do you think of the U.S.'s strategy for this friendshoring to secure its supply chains with countries that they see as more politically in line with them? And how does the Philippines fit into this?
It's an opportunity that we see, and we welcome that opportunity. So is it something that we're happy about? Yes, of course, we're happy about it. But we're not cutting ties with any other country by so doing.
So China wouldn't have to worry about this?
China is still our biggest trading partner overall. Our biggest source for imports is China. So that relationship goes on.
What would be your response to somebody who would say that this move towards the U.S. could potentially harm your relationship with China?
The relationship that we are working on now is on economic relationship, strengthening the Philippine economy through investments from the U.S. We're also working with other countries and inviting their private sector companies to invest in the Philippines. So it's not a sort of exclusive, effort on our part. As I said, we're open to investors from anywhere in the world.
Let's keep talking and bring in Deborah Elms, head of trade policy at the Heinrich Foundation, joining Sri and I live around the desk here at the SGX. Deb, great to see you again. It's been a long time. So welcome back to the show in person, that is. Let's talk first about, I find it interesting, this is it's a trade and investment mission. USTR is not there. Raimondo and Commerce, obviously, they are there. Is this about continuing to de-risk supply chains?
Well, I think Raimondo would say certainly. Yeah. And in fact, it's because it's about supply chains that she's there and not USTR Catherine Tai, who runs the trade office, because the Commerce Department in the U.S. has really taken control of the supply chain agenda. And Raimondo has been really relentless in pushing that agenda, both in the Philippines and across the region, especially around the Indo-Pacific Economic Framework. The pillars that have managed to get closure are the ones led by Commerce and Raimondo, not the one led by Tai. So I think she has been really the face of the administration in Asia on trade.
Absolutely, yeah. This whole idea of IPEF, though, how much at risk is it? I know we're still several months away, but I mean, that is the focus, right? November and the elections. If it ends up being Trump 2.0 again, we know at least some of what to expect from Trump the first time around. What happens to IPEF if it is him?
My guess is that he will kill IPEF on day one of his presidency, because he's already called it a Trans-Pacific Partnership 2.0. Famously, on his first day of his first presidency, he killed TPP. I suspect he will do something similar for IPEF on the second one. Even though they're very different agreements, they do very different things. Symbolically, I think it will be important for him to make his mark. I have killed off 2 trade agreements in a row. Yeah. We will now pursue a different kind of trade policy. So I think it will be gone.
Including weaponizing trade, right? He's remembered for starting a tariff war with China first time around. This time on the stump, he's talking about, on China specifically, tariffs of 60% or even higher. Is that just candidate Trump? Or, I mean, he's got a track record here.
He does have a track record. And I mean, people in the first administration thought he was exaggerating his focus on trade. But I kept saying, wait, be careful. The one consistency that he has had in his own experience has been on trade. It's the one area that he cares deeply about. It's the one area where he's been consistent. And in fact, he implemented what he said he would do in his first administration. So I suspect we will see very high tariffs, not just on China, but he wants a 10% across the board tariff on everyone. Yeah. That is hugely catastrophic, particularly for a trade-dependent place like Asia, but also for the world trading system, because it is the sort of death knell, if you will, for the way the world trading system has been working.
Deborah, how does the tension that is unfolding in the South China Sea right now, involving Philippines, involving China, US to an extent as well, how does that complicate Manila's efforts to build and create new or existing trade ties?
I think it's a challenge, although you saw the minister very carefully suggesting in the interview that you just broadcast that they are not choosing sides, that the Philippines is not choosing sides, that it could not choose sides, in fact, because it has interests in many different arenas, and it needs to get along as much as possible with those who are playing in the neighborhood. So I think for the Philippines, of course, it's complicating the situation. They have done a reasonably good job, I think, so far at navigating some rocky territory, if you will, and I think they will continue to do so, but it is challenging.
But does it feel, yes, agreed, on the one hand, the Philippines isn't entirely moving or shifting away from China's orbit and into the US, but do you feel that they are becoming more discerning with the type of investments from China that are permitted?
I think it's possible. I mean, at the end of the day, every country in Asia's largest trading partner is China. And so that creates a special sort of relationship that is hard to ignore. And you heard this morning that matters to the Philippines as well. It's not just, of course, trade in goods or trade in services. It's also investment flows. Investment flows often favor American companies and American investments as larger sometimes, especially here in places like Singapore. But I think that balance is a difficult one to maintain. And you combine challenges around economics with challenges around security, and that is really the set of questions that should occupy leaders, certainly, for the next decade.
Go ahead.
Thanks, Marty. Where is the Philippines in terms of, because there's a sizable infrastructure deficit, whether it's airports that need to be rebuilt, whether it's the ports, whether it's 5G. Where is the Philippines on that task of infrastructure rebuilding and capacity? And if it is de-risking and diversifying its partnerships, is that going to catalyse that process?
I think it's possible. I suspect that the Philippines, like a lot of countries, will say, we're open for business. We have a number of projects that need to be invested in and funded. If you have the revenue and you have the ability to deliver, come talk to us. And they're going to be a bit less fussy about who that is, because at the end of the day, you need airports, you need bridges, you need roads, you need port facilities, etc. And in fact, they might argue, and I suspect you'll hear this, that this is part of a de-risking strategy for Philippines and others to allow multiple partners to come in, and that keeps them from being overly reliant on any one partner. Of course, it's a challenge because, major powers do not like to share. So this is always a difficult balance between having a demand for better infrastructure and then where does that come from? That's the question, again, that keeps people awake at night.
Deb, I got to say, this Raimundo in the Philippines with execs from Microsoft, Visa, Google, United Airlines. Is this intended to be sort of a message to China? We're going to sink $1 billion into the Philippines. Are you sure you want to continue trying to ram our fishing boats out of the South China Sea?
I think it could be. I suspect it's more to say, if you're the Commerce Department, you have a particular agenda around diversifying supply chains in particular. You don't have a lot of money, the Commerce Department itself. It's not able to invest. But who does have a lot of money and is able to invest? American companies. So I think this is an effort to say to the Philippines and to the rest of the region, we can bring in our private sector with our public sector, and the combined total is actually quite impressive.
Want to watch. Deborah, thank you very much indeed for joining us this morning. We're back shortly.
What do you need to reset globalization? You need essentially to move wealth and capital towards those markets that need it more.
Trade in our projections is going to grow to about 30 trillion by 2030. And it'll be led by Asia, Africa, and Middle East.
There are a lot of fundamental and structural trends around the rise of middle class and therefore consumption, changing patterns of supply chain and digitization.
From music performances to innovative exhibitions.
We are here right now in front of an artwork, one of the most advanced AI model dedicated to nature.
The art played a big role as the prestigious Crystal Awards turned 30.
I love the way that they are celebrating arts and culture. It is a way that we can reach out and have the world come together.
Tune in for this CNBC on assignment at the 2024 World Economic Forum in Davos, Switzerland.
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering sustainability on CNBC.
I've always had an ambition
to do something I loved. I actually got my degree in hotel and restaurant management, but I had a thing for numbers, and that's how I got onto Wall Street. I became a trader. I traded all different kinds of asset classes. The energy in a newsroom when there's a big news day out there feels a lot like the energy on a trading desk on Wall Street. There's a lot of activity. The stuff we do at CNBC means so much to so many people because it empowers you with knowledge and with everything that you need to make the right decisions.
Good morning, everybody. It's a Tuesday. This is Squawk Asia, 7 o'clock in Hong Kong and Singapore, 8 up in Tokyo, 10 down Sydney side. I'm Martin Sim alongside Sri Jagaranja, both of us here at the SGX. These are your headlines this hour. We're working with a bit of a sluggish lead from Wall Street overnight. The S&P and the Nasdaq both slipping. A bit of froth coming out of the tech trade. The market bracing for CPI or inflation data. Sticker prices set to drop tonight Asia time. Former U.S. President Donald Trump speaking up for TikTok, saying that banning the video streaming app would only empower Meta and calling Facebook an enemy of the people, his words. Plus, China tightening control over the country's cabinet as the National People's Congress wraps up. The move giving more power to the ruling Communist Party.
Right, so a bit soggy, some give back on Wall Street, especially with NVIDIA. So we can debate as to whether the wheels are falling off the AI momentum or whether this was a healthy correction. We'll leave that one hanging. But in the here and now, Australia just coming online during the trading day and flat at this level of 7,700. Japanese markets open in the next hour. This was an interesting one because remember, we did see quite a sharp slide yesterday of almost 2.5% after we got the final GDP data, which did confirm that Japan did not fall into a technical recession, although the revised number prior, the initial number prior did show negative growth, but a skirted recession as far as the GDP number is concerned. So that fed into some notions that maybe the BOJ is ready to withdraw from ultra-loose policy sooner rather than later. And we can keep debating that one. Nikkei futures 38,355. So we are looking at a continuation of the slide. Dollar-yen rates just hovering below the 147 level. Martin.
All right, Sri, across in China, the National People's Congress, country's rubber-stamp parliament wrapped up just yesterday, and nothing earth-shaking, nothing really serious happened there. One thing we did notice, though, was the Parliament passing a law to tighten its grip on power. Sam Bottas has details. CPP improving its grip strength.
Yes, and that's not entirely surprising, Marty, but it is a big deal for a couple of reasons. Because for China, it's significant because it is continuing this trend we've seen of centralization of power, but certainly troubling for investors because the view really in the market is that what we're seeing is this sort of weakening of the government authorities and their power. So what we've seen is China actually revising this law now to give the CCP, the Chinese Communist Party, more control over the state council, the cabinet. And this is the first time since it was adopted back in 1982. We've got to remember that, for context, the state council does carry out the function of the government. It does issue decisions on behalf of it. It also enacts laws and regulations. Some 2,800 delegates rubber stamped this, approved this. There were 8 that opposed and 9 abstained. But certainly, according to state media this morning, according to the revision, this is what it all means. The amended provisions further clarify the duties of the vice premiers and state councillors. It adds the governor of the PBOC as a member of the state council. So that very much suggests that it is more about this centralisation of power. The interesting word in all of that is clarify, because many investors would perhaps argue that it's sort of doing the opposite. It does create more concerns around transparency, certainly widening the scope in terms terms of what they're looking at now, but sort of narrowing the scope in terms of what information is available, with some revisions to other laws that we've seen, and also sort of narrowing that clarity. The state cabinet, we've got to remember, has always been overseen by the Premier, the guy who's in charge of the economy, but his power very much has been diluted. We've seen that by the scrapping of that press conference. Now this leaves the government having to toe the party line. This is very consistent with President Xi Jinping strengthening his grip on power. We've seen him over the years pushing domestic policy more towards the party. There is an expectation that this could take years in terms of this transition. So there is a lot of expectation that we could perhaps see more announcements to come. But we've got to point out that state media has rebutted this and said that the idea of the separation of the party has always meant that the specific functions of the party and the government should be separated, not that the government should be detached from the party's leadership tree. So they're suggesting that there is a difference, but the troubling thing here for many, and the argument, certainly from analysts, is that that line is being blurred. And you've got this episode with TikTok now, where this is a really good example, perhaps, of that. And that's the challenge for investors who say this is not helpful in terms of the transparency when making some of those business decisions.
It doesn't sit very easily with this entire notion of market liberalisation, which is what investors do want to see. So, net, MPC, light on stimulus, no big bazooka. How is Beijing going to hit 5% GDP target?
That's been the big question, and very light on detail from the NPC. I think that's left more questions than answers.
And then furthermore, Sam, if I could just throw this one in, where is this notion coming from? Because a fair few people have said, well, look, prepare for a rebound in the second quarter of the year in China. What's going to drive that? Is that going to be organic or stimulus-led?
Well, if you look at what China's been doing, and certainly the announcements that we've got from the NPC, it's been very much about the fiscal stimulus. So they announced this 3% budget deficit, but some are saying that it's not enough to actually propel the growth to that 5%. They're also very much talking about investment in manufacturing. That has been a big highlight, certainly a big focus and emphasis on that. There's been this emphasis very much on creating new jobs and also trying to roll out some worry-free consumption. The big question is whether these sort of new growth drivers that they're looking to transition towards and away from traditional growth drivers like the property sector is going to be enough right now to offset the weak demand that we're seeing. So in summary, I think what the message has been from the NPC is very much more of a bigger emphasis on Xi, the party, national security. We know that that has become and emerged as one of the most important things for him. And also these new productive forces, meaning, as I said, a transition away from the old growth model that we've seen. And there's a big emphasis certainly on that at the moment with, EV, AI, semiconductors in mind, with the international competition in mind as well. But it's whether these buzzwords and these slogans in reality are actually going to, as you say, create this sort of meaningful rebound for the Chinese economy.
And 5% growth, yeah. Thank you. Sam Bottas, they're excellent as always. Right, so we were just talking about TikTok. Take a look at shares of Meta slumping more than 4% overnight after former U.S. President Donald Trump blasted the company on an interview on CNBC earlier. Trump reversing his position on TikTok, saying the app should not be banned in the United States because it would benefit rival Facebook. Take a listen.
Frankly, there are a lot of people on TikTok that love it. There are a lot of young kids on TikTok who will go crazy without it. There are a lot of users. There's a lot of good and there's a lot of bad with TikTok. But the thing I don't like is that without TikTok, you can make Facebook bigger. And I consider Facebook to be an enemy of the people, along with a lot of the media.
And you can catch that full story by logging on to our digital arm, CNBC.com. You can also keep track of the latest in business and finance news by joining CNBC International on WhatsApp and Telegram. Just scan the QR code on your screen and you'll have real-time alerts delivered straight to your phone.
Thank you. Fly Emirates, fly better.
From interest rate paths to economic slowdowns, geopolitics to local politics, 2024 is serving up a host of challenges for Asian businesses.
How are top leaders rethinking their plans and where are they putting their capital? Hear what the C-suite has to say about confronting challenges and adapting leadership in disruptive times.
Get it straight from the C-suite, Tuesdays on Squawk Box.
If you're looking to live it up like a crazy rich Asian, party like a celebrity, or dine like royalty, Singapore has it all.
From historic hotels.
You arrive as guests, you leave as friends, and you come back as family.
To one-of-a-kind shopping.
We pride ourselves on being the one-stop luxury shopping destination.
Haute cuisine.
This is our signature Campot peppercorn pigeon.
And sunset sails.
You really have to experience it to understand it.
All on the next First Class.
This month on Managing Asia, I'm talking to Philippines' oldest conglomerate, Ayala Corporation, who wants to lead the EV revolution in this country. You don't want to miss that.
The Bond Report is brought to you by PIMCO.
We're in Asia, Australia, New Zealand. Not an economic release day. That comes tomorrow with the Consumer Price Index, a biggie. Our February read on Consumer Price Index, and we'll be paying particularly close attention to every metric. And of course, Thursday, we see the cousin of the Consumer Price Index in the form of the wholesale inflation reading. That'll be the Producer Price Index. Today, how did the markets act? Well, we had $56 billion in 3-year notes auctioned off by the U.S. Treasury, the first leg of $117 billion in coupon supply, and it occurs at a time where the Biden administration announced its fiscal 25 budget proposal at $7.3 trillion with a T. Boy, has spending ramped up in the last handful of years, and it really does underscore why we pay so much attention to debt auctions, because we have so much debt and it keeps climbing, and it really looks like that will be the big adverb moving forward, climbing with respect to debt. How did the auction go? Investors stepped up to the plate. I gave the auction a B+ in terms of demand. It's straight up 1 o'clock Eastern. Tomorrow will be 10 years, followed by 30-year bonds. Now, we look at the equity markets, and they had a lot of red early, and the red slowly started to get smaller as the day progressed. Interest rates, well, we did have 3-year notes, the aforementioned maturity that we auctioned $56 billion of, closed at exactly a 1-month low yield on Friday. It has moved a little bit higher today. All Treasury yields are slowly rising going into tomorrow's CPI reading. How important is tomorrow? I can't stress how every inflation number and every jobs number has the potential to give us the final information we need to process when the easing cycle may begin by the Federal Reserve this year. Reporting from the CME HQ, I'm Rick Santelli, CNBC Business News, Chicago.
Thank you, Rick. Let's bring in Dan Greenhouse for a steer on these markets, Managing Director and Chief Strategist at Solace Alternative Asset Management. Dan, thanks a lot for joining us. Do you agree with Rick? Is CPI going to be another gut check for this market?
It's certainly a gut check. There's no doubt about that. But listen, every inflation reading for the better part of a year has been a gut check for markets. And other than 1 or 2 readings here, including the one we just got a month ago in January, has generally corroborated the idea that inflation here in the United States is on a downward trend back closer to the Fed's target. And the only issue now is how long and how difficult that final last little bit of inflation is to wring out of the system.
And it feels like an uneasy calm has descended on the bond market. Have we seen the worst of the volatility in the rates market when you look at what yields are doing in the price action there?
Well, it's hard to be as volatile as it was. So in some respects, yeah, the worst of the volatility is probably behind us. But if you believe, again, getting back to the inflation point, if you believe that inflation is on a path back down, call it into the mid-twos, and it might take a little longer than some people thought to get there, but if you think inflation is on that path, then presumably in conjunction with the Fed beginning the process of reducing rates, then some stability should take hold, and indeed has in the bond market. And again, I think the likelihood, not the absolute, but the likelihood is that continues, because I think the path for inflation continues to be, at least for the PCE, down into that mid-2% range by the end of the year.
Having said that, though, Dan, I mean, just a whole string of data, right, starting with probably the Jan jobs report, then CPI, PPI, then PCE, and then the Feb jobs report, et cetera, all seems to indicate that inflation is going to be sticky, and we could be looking at rates and yields higher for longer, no?
Yeah, no, but listen, that's two different conversations. One is inflation proving to be a bit stickier than the consensus thought? The answer to that question is unquestionably yes. I think there's a group of people, it doesn't matter who it was, but there's a group of people who thought that this last mile from the beginning might be a little more difficult to bring out of the system. And again, I think that's probably proving to be accurate right now. But as in terms of the economic data and rates, sure. Listen, a lot of data has come out quite strong. Q1 GDP is going to be presumably, with most of the quarter done, somewhere in the 2% range or so. That's a pretty good quarter for GDP growth, especially after what we just went through. But even with all of that said, the issue for the Federal Reserve is not that they can't reduce rates. The issue is by how much. And I think that's the larger conversation. You've seen this in the futures market, whereas everybody knows we've gone from, call it 6 or 7 rate cuts priced in to something closer to 2 to 3. And the market has done just fine. You've seen stability in the bond market and ongoing gains in the equity market. But again, what I'm trying to say is, like, the Fed is telling us that they want to and plan to reduce interest rates sometime around the summer. And they're not doing it because there isn't weakness. They're doing it because the inflation data continues to move in the right direction.
All right. So for the right reason, in other words. Having said that, though, you are looking for a short-term or near-term pullback or kind of sideways move by the market. What we've been seeing the last couple of sessions, especially led by tech, is that the beginning of that?
Yeah, listen, I think so. It's impossible. No one sells at the top and buys at the bottom. But for a couple of days now, a bunch of us here in the States have just been looking at the price action in a number of these important stocks, NVIDIA obviously being the poster child for this move, this momentum move. And I'm making no point about NVIDIA or any of these names as a fundamental reason to own or sell. I'm just merely saying that when you look at some of these charts, they are, if not parabolic, pretty close to parabolic. And there's just no way that some of these charts were going to be sustainable at these levels. And, well, I didn't know when. It was a safe assumption to assume sometime around now-ish that price momentum would probably falter. And it looks like you're starting to see that now. The Momentum ETF, the ticker is MTUM here in the States, is down well over 1% in 2 consecutive days. That's probably going to continue at least until the Fed meeting of next week, and when we can get a handle on what they're thinking. But yes, it does look like this is a period where the rapid ascent that we've seen of late is probably going to stop.
All right, Dan, stay right there. A lot more to talk to you about. Continue with Dan Greenhouse coming up in just a bit. As we head into a break, take a look at shares of Illumina in early Sydney trade at 127 last time. That's up more than 7.5%. The company confirming it signed an agreement to be acquired by Alcoa, the U.S. aluminum giant. All-stock deal values Illumina at about $2.2 billion. Illumina says that CEO and also top directors are in favor of the deal. Shareholders set to vote on it by September of this year. Quick break. We are back in 2.
The Bond Report is brought to you by PIMCO.
Tyler Matheson, Kelly Evans, Power Lunch, CNBC.
from music performances to innovative exhibitions.
We are here right now in front of an artwork, one of the most advanced AI model dedicated to nature.
The arts played a big role as the prestigious Crystal Awards turned 30.
I love the way that they are celebrating arts and culture. It is a way that we can reach out and have the world come together.
Tune in for this CNBC on assignment at the 2024 World Economic Forum in Davos, Switzerland. Sonia Cheng hails from one of Hong Kong's most prominent families and serves as an executive director in the family business, the New World Development Company. In 2011, the company's hospitality division acquired Rosewood Hotels and Resorts, and at the age of just 30, Sonia was appointed CEO of the since renamed Rosewood Hotel Group. With a portfolio of legacy hotels, Sonia set about reimagining the Rosewood brand's take on luxury for the modern traveller.
We operate properties around the world in 19 countries, and we have a very strong expansion pipeline with 27 properties that are under development. We launched a new membership club concept, and we also venture into our own wellness space. So the goal really is to create not just a luxury hotel brand, but really a luxury lifestyle brand, and really building that ecosystem and providing and curating a lifestyle to our consumers.
Back on the box on a Tuesday, and we're back live with Dan Greenhouse, Solus Alternative Asset Management, still with us this hour. Dan, let's move away from equities if we could, or rather maybe a better way to do it is, we were talking offline, you were saying that you're pretty much on hold. You're happy with where your money is positioned right now. Where would that be?
Well, for Solus, I think the way that we would characterize it, and to be clear, the PM obviously has ultimate final say on what happens, but we've maintained a lot of our exposure in the energy space without getting into any specific investments. The narrative that's been in place for several years, we think remains in place. These are still, we're repeating already here, but they're cash flow machines. They're doing a lot of investment. They're returning capital to shareholders. They've been terrific stewards of their balance sheets the last several years. The balance sheets are all cleaned up. The companies are operating well. Output is terrific, and so we're pretty happy with the energy space. Obviously, it's lagged to some degree, although there's been a bit of a pickup lately, and that still remains of interest to us. And then the consumer in the U.S. is doing quite well. I think there has been this concern for the better part of a year that the so-called excess savings were running out, and the consumer would run dry on firepower when it did. But what we've seen quarter after quarter is that's not the case. When you look at household net worth, it's up to north of $150 trillion in the United States, up meaningfully just in the past year. Brian Moynihan, the CEO of Bank of America, recently spoke at a Bank of America conference and talked about how the lowest bank consumers there still have 3 or 4 times as much money in their checking accounts than they did pre-COVID. So we think the consumer is doing relatively well, and there's a number of different ways that we've been playing it, and I think that theme remains more or less in place for us on both fronts.
Is there anything within commercial real estate, Dan, that concerns you? And similarly, within the regionals, when you consider what's been happening with NYCB?
Sure. I think everybody is rightfully so worried about commercial real estate, and particularly the regional's exposure to it. I think while we have no particular expertise in the regional banks, I think speaking for myself, my own personal view is that probably, and this may go down as famous last words, but I think you might see something similar with commercial real estate to what we saw with the malls scare in the middle of the 2010s, where everyone thought the malls were going to go away and any number of CMBS products were going to explode, and people who held CMBS would have liquidity issues. And what you saw was mall landlords working things out with retailers, investors working things out with malls to try to extend and pretend the situation for as long as they could. And it ended up working out quite well for reasons that we don't have time to get into. And my guess is on the commercial real estate side of things, you're probably going to see banks and landlords working together along with businesses to try to figure out the best way to ameliorate this problem, because the last thing anybody wants is in these large cities that have particularly large CRE exposures, to have wholesale exoduses and write-downs on assets that nobody can bear. So my personal guess is that we'll work through this over time.
Dan, so then let me ask you, do you see opportunity in commercial real estate? Because I know your shop has a strong expertise in distressed debt and high yield.
Yeah, we've done a bunch of work on it. I don't think we're particularly any more knowledgeable than anyone else in our space. But I think whenever there's distress, there's opportunity, and that's why over time that investment thesis has arguably greater returns over long cycles. But I mean, obviously, I can't talk about what we are doing or are not doing, other than to say there's clearly opportunity when you have, granted, infrequent asset sales, but when you have assets being written down 20, 30%, it's going to shift from weak hands to strong hands. And whenever you see that type of whenever you see that type of event occur, there's always money to be made.
Dan, have you got a line on Bitcoin after the SEC ETF approval? Because we're seeing a surge of interest now, record high after record high.
Yeah, listen, we're not a crypto fund, so I don't want to comment in any specific sense. But listen, my own personal view is that I've never understood. Like, I'm not going to say anything particularly unique here. I've never understood what the particular value is. Obviously, I get that blockchain has value. But it appears to me to be purely a speculative investment. Obviously, there's no cash flows, et cetera, et cetera. But I think the run-up we've seen lately is clearly tied to the spot ETF, not to mention the broader landscape, the broader risk-on landscape that's taken hold. But we've looked at other ways to try to exploit the move. Without getting into specifics, there are alternative investments that are not crypto per se, but crypto adjacent. And I think investors would be wise to look for those sorts of businesses that are ancillary and willing and able to benefit off the rise of Bitcoin and crypto.
Just very finally, Dan, and speaking to your wheelhouse, how much of a portfolio diversifier is asset-backed finance, hedge funds, and private equity in your point of view, and how do you approach those areas?
Well, listen, I'm going to give you an incredibly biased answer because I work at a hedge fund, but I think for certain individuals, private equity, hedge funds, et cetera, can be an incredible diversifier. I think where this conversation goes awry is when you lump all every hedge fund and every private equity firm into the same category. Hedge funds can be long-short equity, can be distressed credit, can be asset-backed, structured products, et cetera, et cetera. The return streams that are offered by a number of hedge funds can be an incredibly powerful diversifier. Where the challenge comes into play is in traditional long-short equity.
Dan, great having you on. Thank you very much indeed for joining us. Dan Greenhouse there from Solace Alternative Asset Management. We're back in 2 minutes.
At Interactive Brokers, independent RIAs work with the best research and trading tools designed to help them outperform the markets. Meet them at Interactive Brokers Investors Marketplace for Advisors. Advisors at Interactive Brokers keep all they earn on our low-cost platform, with no ticket fees or custody charges, low margin rates, and high interest earned on idle cash. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Be first on world markets, first to the global business conversation. Get a jump on the investing day every day with Frank Holland. Success starts early. Worldwide Exchange. CNBC.
The biggest names in business.
It was a really good quarter.
When it matters most.
This growth was driven by transactions.
Before they talk to Wall Street, they talk to John Fort and Morgan Brennan. Closing Bell Overtime. Weekdays on CNBC.
We're moving from the autopilot era of AI to co-pilot era of AI.
We are just at the dawn of the robotics age.
The more experience you give it, the more capability this AI model can achieve.
Hopefully improves productivity, and it doesn't displace more jobs than it creates.
How to maintain our humanity if we live more and more digital lives.
The new era of tech on CNBC.
Being the first woman engineer at Google, I got asked all the time, what's it like to be a woman in tech? And I realized that I didn't feel like a woman at Google. I felt like a geek at Google. It was the passion around what we were doing that really, for me, neutralized the notion of gender, which is why I like to say passion is a gender neutralizing force. To me, ambition is being undaunted by the impossible. I've been really lucky to work at two companies, Google and Yahoo, that really fundamentally changed the world.
CNBC. Live ambitiously.
Time check, 7:30 a.m. Hong Kong, Singapore time, so less than 30 minutes away from the Tokyo market joining Tuesday trade. Futures are handicapping what looks to be a softer start. Dollar yen, we are sub 147 still, 146 and 3/4 or thereabouts. Seoul market opening up same time as Tokyo. Sherry Kang, how are we shaping up today?
Yeah, so it looks like we're going to just get a very soggy kickoff to things. So looking at the South Korea ETF, EWY, closing out to flat. But of course, this comes after that pullback yesterday. The Kospi down 0.7% yesterday, retreating from that 21-month high. And of course, a lot of the weakness that we saw in chip stocks really definitely did the trick there. So some profit taking coming through when it comes to the chip space. We'll see if that continues as well. In the meantime, it certainly looks like it's going to be a wait-and-see kind of a session ahead of the U.S. CPI print out later on tonight, Asia time. And of course, we are watching the Korean won as well as the bond yields when the market comes online here. And of course, the consensus in South Korea is that if the Fed goes with that rate cut, the BOK won't likely wait too long to follow suit here. So that's why it's really the key here, and we've got the Korean won at 13.09 per dollar as we speak. In the meantime, let's take some time talk about the liquidity situation in the stock markets, because we've got reports suggesting that Bitcoin or alternative investments like Bitcoin and altcoins, the crypto trading volumes in South Korea have exceeded that of the stock market as of this weekend. Certainly, Koreans embracing this high risk, high return kind of investments. And of course, I'm definitely reminded of the so-called kimchi premium. We're talking about Bitcoin being a little bit more expensive in South Korea on South Korean exchanges, rather compared to their global peers. Yes, it's true. And we've got that arbitrage going on. So maybe that is taking some steam out of the equities markets as well. And really quickly, just really pushing toward the November elections in the United States here, we've got South Korean President Yoon Suk-yeol actually sitting down with the governor of Arkansas, Sanders. We're talking about former White House press secretary during the Donald Trump administration. Of course, they sat down to discuss the South Korea-U.S. alliance. Her message on the top line, it's really discussing trade and investment opportunities with South Korea, highlighting her state's potential for a lithium development as well. But at the same time, her message during her meeting with some of the private business officials was that Trump will do a better job than the current President Biden if Trump gets reelected. So definitely something to watch in terms of South Korea-U.S. alliance in this big year of elections. Shri, it's back to you.
Great point, Sherry. Thank you very much indeed for that. Now, shares of Lever Style sinking 7% in Hong Kong yesterday after the apparel supplier posted its annual earnings. Emily Tan has the numbers. Hi, Emily.
Good morning, Sri, and a bit of profit taking for shares of Lever Style after we've seen a bit of a run up in the past week in the shares. The report card for the full year showing the apparel supply chain manager full year profit of $15.6 million. That's an increase of more than 7% year over year. In terms of revenue, the company has posted increases of between 60 and 50% for the years 2021 and 2022 respectively. And after we had a huge, glut of inventory in the system, now what they're seeing is a mild decline in the top line. Revenues down 4% to $208 million. Brands and retailers, they say, were short on inventory, so they ordered inventory earlier and in higher quantities. So then they were stuck with a sea of inventory, and that suppressed some of the buying in 2023. Looking at the revenue by geography, you could see the U.S. is the biggest market, $125 million. That was down 8% in terms of revenue. And Greater China markets, a notable 74% decline at $2.2 million. 2023, they say, was difficult for the industry, but 2024 also appears challenging. And what that means is valuations expectations are becoming realistic. And Lever Style is no stranger to M&A, and they are now on the acquisition trail. Let's talk more about this. Stanley Cito is Executive Chairman at Lever Style, and he joins me around the desk. Stanley, good morning to you. It's good to see you.
Good morning, Emily.
Now, the last time you were here with us in August, you were telling us about this inventory glut, and I quote, people were buying on the supply chain drastically has been reduced. Now, with this 4% decline that we're seeing in revenue, would you say that your earnings came out rather unscathed?
Yes, I think we're very fortunate that our business model allows us to outperform the industry, both on the top line and on the bottom line. Last year, there was a lot of inventory being worked through the system so that people were trying to basically, even though if they were growing, but the purchasing was down because of the inventory position they were in the start of the year. And we got through that year. And I think most of the excess inventory has been worked through the system. But this year, we're looking at a very difficult economy where consumer demand, especially on discretionary spending, seems to be down. And if the U.S. slips into a recession, that will sort of make things even worse. And Europe, in many places in Europe, like the Britain and probably Germany, already in recession. So the world economy is looking much more wobbly, and that doesn't bode well for consumer demand.
Talk to us a little bit more about this buying. Has it resumed? Where is it? Where is the demand coming from? And what more can you tell us about what it reveals about the global economy?
Well, we're just seeing the inventory glut has been worked through. So nowadays, I think brands are more buying according to their actual retail sales. But retail sales themselves are looking a little soft. And there will be basically consumers have to put food on the table, and there is interest rates have risen. Mortgage rates have gone up, and basically we're seeing weakening consumer demand across the board, all over the world, not just in the U.S.
The U.S., you saw a revenue decline of 8%, but notable is in Greater China, it was down 74%. Now, this is where your brands are based, which is where you're taking your revenue from. What's happening there? Would it be an impact of geopolitics that is causing this decline?
Less so. In China, it's much harder to do business in China nowadays. And, with the weakening, slowing economy, payment terms become an issue. So we just have been retreating from that market and focusing more on the developed world.
You're debt-free. You have $18 million in cash, and you've already indicated that you are on the lookout for M&A for growth. What are you looking at? What types of clothing are you looking at buying? Where and what?
Well, we're looking for complementary businesses that will add synergies to ours. And we look at product types. So, for example, we're a little bit weaker in active and outdoor. Would be favoring those companies. We're stronger in men's than women's, so we probably want to look at companies that make a great feminine product. We're also looking for different geographies. So we're strong in Vietnam, but weaker in some of the Southeast Asian and South Asian countries. So to the extent that these companies have production bases in those places, would favor those. We're also looking for sort of more scale, and there is operating leverage to be gained. And, our strategy has always been during good times, we grow organically, such as in 22 when during the post-COVID rebound, we grew over 50% basically organically. And during tough times, such as during 2020, and I think this year as well, we'll be trying to grow through acquisitions. That will position us for further growth when times get better again.
Talk to us about your exposure in terms of Vietnam. We're, of course, talking about the upcoming U.S. presidential election, and if Trump makes it back into the White House, what will it mean for Lever Style? You guys are already not so exposed in terms of manufacturing in China. That has moved a lot into Vietnam. Where else would you potentially be diversifying or need to in anticipation?
Well, what we've learned over the last 5-8 years is that geopolitics are entirely unpredictable. If Donald Trump gets in and suddenly he sees the trade deficit with Vietnam and says, wow, I want to slap on the big tariffs on Vietnam, we need to move. We need to be much more diversified in our production bases. And we're looking at other places in Southeast Asia, like expanding in Cambodia, Indonesia, South Asian places like Bangladesh, India, and possibly even places like closer to our customer markets like Mexico, Morocco, although the immediate sort of the short-term focus will be more in Asia. And I think with our asset-light business model, we're much sort of better placed to move production than our asset-heavy competitors.
For 2023, you flagged consumer confidence, high interest rates, high inflation, and geopolitical as the many risks and headwinds that you had to deal with. Give us an outlook for 2024.
We are not so optimistic on the 2024 economy in general. The U.S. could slip into a recession, and there are different economists with different viewpoints. We don't have a crystal ball, but if that happens, that will be sort of a big drag on the global economy. We are sort of positioning ourselves quite defensively, being very careful with giving credit, being very careful with expansion in an orderly manner, but then also looking for M&A opportunities. During tough times is when valuations become more reasonable.
Now, we've looked outside. Let's look inside Lever Style before we let you go. Some changes in your management team, which go into effect on April the 1st. The COO will become the CEO. The CEO becomes your vice chair. What's all that about?
Well, it's all part of succession planning. Our CEO, William's been with us for a year and a half, and he's sort of a new blood trying to bring the company forward with platformization, digitalization, and he's assuming the general management of the entire company. Whereas our CEO, Eddie, he's been a sort of great partner for me, and he will remain to be a great partner as a position of vice chair, and he'll be helping to look at acquisitions and also basically helicoptering in as CEO of these companies that hopefully will take over.
But the decision-making still lies with you.
Well, I'm working with the whole team. It's never one person.
Stanley, thank you very much for coming to talk to us today.
Thank you very much, Emily.
We've been speaking with Stanley Sito, Executive Chairman at Lever Style. Back to you guys in Singapore.
All right, thank you so much, Emily Chan. Tan, love the conversation there. Coming up, more from the C-suite. The CEO of accounting software company Xero joins us when we come right back in 2.
No matter who wins in the political campaign in the U.S. in November, we are the most high-speed, flexible company in our space. We already have set up a fabulous world-class center in Vietnam for manufacturing and in Mexico. And we also have a number of factories we are reshoring into the U.S. as well. So we're positioned beautifully no matter what happens. If nothing changes or everything changes.
Many economists agree that the seed for China's current housing crisis was planted in 1994. That was the year Beijing decided to overhaul its entire tax system. The economy was growing, and the central government wanted a bigger cut. So it made tax reforms that helped the state take in a lot more money. But it was at the expense of local governments. At the same time, municipalities were being given ambitious growth targets, and so they were encouraged to increase revenue from land use sales. Thankfully for China's cities, there was massive demand for these 70-year leases. 150 million Chinese citizens moved into urban areas in the 1990s, and they all needed housing. Profits from selling land shot up and began to make a huge share of local budgets. In 2010, for instance, land conveyance revenue made up nearly 70% of local revenues. As a result, municipalities became increasingly dependent on a euphoric housing market.
Sponsored by Bank of Singapore, Asia's global private bank.
Welcome back. In this week's C-Suite, we're talking to the CEO of accounting software company Xero. The New Zealand-based company, which focuses on small businesses, is jumping on the AI bandwagon, working on a generative AI tool to help customers automate common accounting tasks like generating invoices and also chasing for overdue payments. Now, the beta version of its tool, which is called JAX, or Just Ask Xero, drops later this year. For more, Sukhinder Singh Cassidy joins us, CEO of Xero, live out of the Bay Area. Sukhinder, great to see you and appreciate your time. Before we get into JAX, which sounds pretty interesting, I got to say, the space that you're in, accounting software for small businesses, is pretty crowded, right? I think MYOB, I think of QuickBooks, et cetera, and a number of others as well. In terms of differentiating yourselves, what sort of niche are you trying to occupy or carve out for the company?
Well, first of all, we're a global leader. That in and of itself differentiates us. There's very few accounting firms that play at global scale. So scale on that, we have almost 3.7 million subs at the half year. That is a really, really large platform by any dimension, number one. Number two, what's always differentiated the company is we're a pioneer. We were early into cloud accounting, really taking advantage of that shift to real-time collaborative software, and Xero has benefited. And third, I'd say one of the biggest differentiators of the company is, the love of the brand. Whether you talk to an accountant and bookkeeper or a small business user, they'll tell you Xero is very easy to use, and as a purpose-driven company, really has a strong brand following. Those are three things we're really proud of.
All right. So would it be fair to say, though, that, in terms of stratification, right, you would probably appeal more to, and your customer base would be less sort of one-man shows, but smaller-sized companies, which still actually have, let's say, an accountant on board, et cetera, and, your software would be familiar to somebody like him as opposed to somebody who's starting from scratch, from ground zero with no accounting background.
Well, actually, we have two channels, both the direct self-serve channel, where SMBs find us directly, as well as accountants and bookkeepers. But you hit one core thing. Our core segment is, I would call, 1 to 20 employees. We pick up a fair number of sole traders because the product is definitely easy enough to use if you are small on the smaller side. But think, $500,000 to $5 million in revenue, that Xero sweet spot, where there is what we call a lot of jobs to be done. A small business who needs help not just with their accounting, but with their taxes, not just their taxes, but cash flow. Not that just their cash flow, but invoicing, or payment collection. These are all the types of jobs that are pretty core to the Xero platform.
All right. Talk to us about JAX. What is that all about?
Well, JAX is Just Ask Xero. That is the generative AI companion. We announced at Investor Day just about 10 days ago. But I would note that we have long been investors in AI, like many, many companies in software, but particularly those that deal with customer data. We have built core machine learning on top of everything from, account categorization all the way to OCR, being able to intake your bills and automatically scan them. What's different about JAX is a companion to assist you with many, many different tasks on Xero. And like others, we started with Gen AI in our customer service area. Then we used it with small business onboarding. And now we hope to take JAX to the many surfaces in which our customers operate, not just on our site, but in email and text.
Hi, Sukhinder. An article on CNBC.com November the 16th last year said small and medium-sized businesses are cutting software spending. Is that showing up in subscriber growth? And how would you characterize the demand outlook in the next 3 to 6 months?
Thank you. Well, first of all, let me just speak to the core point, which is we don't see, I would say, macroeconomic conditions, hitting demand for accounting products that really help you manage your cash flow. If you think about our product, when times are good, you need it, and when times are tough, you need it even more. So I think we are proud that we've always been a fairly resilient company. I think that's because of the core job we do in helping small businesses manage their cash flow.
If I'm a small business owner, what then is the ROI in terms of me buying the accounting software? Because it doesn't come cheap, does it? Can you just give us a sense of the efficiency gains and the upside of onboarding your technology, Sukhinder?
Sure. Well, first of all, we think of the price points as quite affordable. They run from the single digits if you're on an accounting partner only edition, to call it anywhere from $50 to $100 if you're on a very advanced edition. But we always measure value provided against price, and I would say price points are quite reasonable for the value we provide. Now, I think if you think about the ROI for a small business, it's very simple. Number one, get time back. Get time back to run your business. Number two, get paid faster. Again, I talked about invoicing and payment collections being a big job on our platform. Number three, get insights. Get predictive on what you need to do next to manage those cash flow better. And then, of course, we integrate with many, many essential apps that give you further insight and further time back, whether it's your Shopify account, whether it's your payroll system. Xero integrates thousands of apps onto its platform. So time and insight. Those are the ways we measure the value of
Got
SMBs.
it. Just correct me if I'm wrong, Sukhinder. Jax is currently being beta tested. If that's the case, when will it be commercially available?
We've just said later this year. So what we did is we gave a nice preview of Jax on Investor Day, and obviously still testing, and plan to announce it and plan to release it later this year. It's already announced, and you can check out a working preview of it in our Investor Day site.
Sukhinder, back to Jax, right? The fact that you've got almost 4 million subs globally, right? Does that give you, I wouldn't say first mover advantage, but certainly an advantage, simply because of the fact that, to develop Jax, it needs data. You need to feed it, right? And you've got potentially 4 million subs to feed that data to help Jax learn and grow.
Well, I think you're hitting one of the key points in AI and in generative AI. The data on which you train is a key competitive advantage. And when we look at the advent of AI and then again generative AI into the future, we do believe that having at-scale customer data gives us an advantage in building better tools. And so we do see what you see and are excited about the opportunity to give even more time and insight back to small businesses and accountants.
Sukhinder, can you give us a sense of how you are going to expand geographically? Because you're listed in Australia, accounting cloud penetration rates in New Zealand and Australia, as I understand them, are already pretty high. Does that put a cap on growth, or are you looking elsewhere in the region, if not globally?
Well, I think you've asked the key question. Again, we just talked about this on Investor Day. What we really talked about is our market strategy. And we believe we have 3 large markets that continue to drive opportunity for us. And that is Australia, which continues to see very strong subscriber growth, the UK, and the US. And both, we believe, have high potential to be, a disproportionately large markets for us in our portfolio. And then, of course, we have a number of medium-sized markets that continue to grow quite efficiently. Canada, South Africa, New Zealand, of course, Singapore, and then we have a rest of world product that continues to offer services to the rest of the world, literally 100 plus countries. So we think that kind of portfolio gives us ample TAM.
Sukhinder, we'll leave it there. Fascinating talking to you about the rise of accounting software. We appreciate your time. Sukhinder Singh Cassidy there, CEO of Xero. We're going to squeeze another quick break. Back shortly.
Sponsored by Bank of Singapore, Asia's global private bank.
You can do it, son.
Good things come to those who wait.
It's time to take that rite of passage.
You can do it, son! I'll keep going as long as it takes for some good to come my way.
You knew I would do it, didn't you?
Global markets, up to the minute, front page news. Wake up to Frank Holland and Worldwide Exchange. CNBC.
If you're looking to live it up like a crazy rich Asian, party like a celebrity, or dine like royalty, Singapore has it all.
From historic hotels
You arrive as guests, you leave as friends, and you come back as family.
to one-of-a-kind shopping.
We pride ourselves on being the one-stop luxury shopping destination.
Haute cuisine
This is our signature Campote peppercorn pigeon.
and sunset sails.
You really have to experience it to understand it.
All on the next First Class.
We're not in this for the short term.
There is no place in the world where we get the kind of access to so many amazing interviews.
The future of the tech industry, AI clearly a huge part of that journey.
How big a game changer is this?
Let's go.
Welcome back. India is enacting a controversial new citizenship law. Lynn has the details. Lynn, there were widespread protests against this when it was introduced 4 years ago.
Yeah, that's right, Sri. So in 2019, when these laws were passed, they sparked mass protests. So there were violent clashes, scores of people killed, many more injured. And now, of course, just ahead of this general election, the government has decided to implement these laws. Now, what they are is essentially undocumented migrants from a number of different religions, except if you are Muslim, they are able to get a pathway to Indian citizenship. If they fled from 3 Muslim-majority countries, that's Afghanistan, Bangladesh and Pakistan, and it must have happened before the end of 2014. Now, this law has, at that time when it was introduced, sparked a lot of anger among Muslims, among rights groups. They argue that it is discriminatory, that it undermines India's foundation as a secular nation which is enshrined in its constitution. They also argue that it doesn't apply, for example, to the persecution of those fleeing non-Muslim countries like Sri Lanka, looking at, for example, the Tamil refugees there, or in relation to Rohingya Muslim refugees fleeing neighbouring Myanmar as well. There's also Muslims in India very worried about what this law, combined with a proposed national register for citizens, will do in terms of potentially marginalising them within the country. But the Modi administration has been defending this law, making it very clear that it is designed to protect those that are facing persecution, and that it wouldn't be used against any Indian citizens. In terms of the implications here, of course, as I said, we are staring down the barrel of an election that is coming up. Certainly opposition parties, as well as some analysts, are saying that the timing here is aimed at basically polarising to further consolidate the Hindu vote, which is already very strong, because remembering within India, the population is 80% Hindu, about 14% or about 200 million people are Muslim in terms of their religious background. The other thing to note here, Martin, is this risk of unrest, because we saw it happening in 2019. You've also got the Communist Party. They are the ruling party in Kerala. They've already called for protests yesterday on the back of this.
Oh, dear. Okay, we'll be watching out. Thank you. Excellent, as always, Lynn there. Right, back to market. Sydney's been up and running for about an hour. Here's how it is shaping up so far Tuesday. S&P SX 200 is up 0.25%, so fairly steady. Australian dollar 66.14. We've got Tokyo kicking off top of the hour, so less than 3 minutes to the start. Futures are handicapping a down start. Dollar yen still sub 147, 146.75. We are back in 2.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 26 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
Real money, real debate, real-time moves. Scott Wapner, live from the New York Stock Exchange. Halftime report, CNBC.
This month on Managing Asia, I'm talking to Philippines' oldest conglomerate, Ayala Corporation, who wants to lead the EV revolution in this country. You don't want to miss that.
Every new vehicle we put out, we're improving fuel economy and emissions.
We need a balanced and a fair energy transition for everyone.
The total value chain of battery will be very important.
Improve our operational efficiencies and reduce the consumption of natural resources.
Environmental sustainability is a must, and energy security is another pillar.
Renewable energy is cheaper than electricity made from fossil energy in 90% of the world already today.
Fostering sustainability on CNBC.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers. Try loads of different things. You may start off as a biochemist but want to be a TV anchor. Try lots of different things, then you'll find out what you like the most and what you're best at. Before I was a CNBC anchor, I was a trader in the city for 11 years, trading all kinds of financial products. I think CNBC viewers are ambitious. Clearly, by watching the show, by watching the channel, they want to improve their lot, improve the lot of those around them as well.